Tuesday, the 6th of October. Welcome to today's Frontier Opening Bell. My team of panelists today, Ali Khan Sacho, the CEO and founder of Rich Frontiers Management. Thank you, Ali. Good morning. Welcome.
Pleasure to be with you, Basan.
Great to see you again on the show. Ayodeji Eboro, who is from Greenwich Merchant Bank. Thank you very much, Ayodeji. Good morning.
Good morning. Thanks for having me.
And we have another analyst from Vetiva Capital Management, Onyeka Ijoma. Good morning.
Good morning, Basan. It's a pleasure to be here.
Thank you, gentlemen. Let's look at the market. Nigeria's stock market gave a roaring performance yesterday, 2.11%. And that was one of the strongest we've seen in recent weeks. But again, we'll talk about that on the show. Ivory Coast BRVM was 0.05%, 124.18 at the closing. The Egyptian 30 around 11,000, down 0.58%. Kenya market went up less than 0.1%, and South Africa's GSE about 0.5%, 54,000 reading, still below that psychological level. Yesterday, South Africa released some of its economic data around private sector factory activity. So let's talk to East Africa, where the central bank is paying the Uhuru Kenyatta's administration 2.5 billion shillings in dividend. Well, that looks like a pile of cash, if you ask me. And then East African Breweries Limited, cross-listed across a few exchanges on the East Coast, got a long-term buy from Genghis Capital. Rwanda is launching its own capital markets investors clinic. We have a similar clinic in the Nigerian market, I believe. And the Central Bank of Uganda says the country's debt is still sustainable. Conversation around debt sustainability, debt forgiveness, debt moratorium, whatever it is on the continent within the pandemic. Let's hit the ground running. Show me these 2.5 billion shillings, Ali.
So, the Central Bank of Kenya has been conducting operations and extremely profitable operations in the foreign exchange market in particular. And I think this is a valuation situation where they've created P&L and are able to pay the government a handsome dividend. Typically, they've been a good pair of dividends to the central bank, to the central government, and I think this is in line probably with the management of the foreign exchange markets in particular. Other stories that you were touching on, Genghis Capital issuing a long-term buy on East African Breweries. East African Breweries had a very tough second half of the full year. They reported full year earnings, which were down over 50% year on year. And it's not rocket science to work out why. This was a lockdown period. They were unable to shift product through the bars where they shift a lot of product, and therefore suffered from that. So I think now that we're seeing the opening up, we should have a good rebound in earnings. But currently, we're talking of a PE ratio around 35 when you look at it against the valuation of the historic earnings. But I tend to agree with Genghis Capital. I think if you're looking to accumulate, this is a great consumer stock and an outperformer in a good market. OPEC FID approving $20 billion for East Africa SMEs. There have been a lot of approvals of late for SME on lending. Equity Bank got $100 million from Proparco. So, people want to stimulate that part of the economy. It is the engine for our economy, and I think this is in line with that. Rwanda Stock Exchange launching a capital markets investment clinic. They're always ahead of the curve in these matters, doing a lot of work, investor education work. Uganda debt still sustainable. This is an issue around interest that we're paying in East Africa. It's taking a very, very big chunk out of our budgets. And I think they're trying to assuage concerns about debt sustainability over there in Uganda. But this is a problem I think many of our countries are facing in sub-Saharan Africa at the moment.
I agree with you, Ali. It's a whole lot of issues around debt. It's not going away anytime soon from the look of things. Let's check in with the West African markets. The Nigerian market has had 2 straight weeks of a strong rally on the back of the monetary policy rate cuts 3 Tuesdays ago by the central bank. But one of Nigeria's largest financial services companies, FBN Holdings, yesterday got a rich Fitch Ratings affirming B- rating, but says the outlook on these financial services giant is now negative. PZ Cussons is one of Nigeria's largest HCP, posting 80.6% loss after tax in its first quarter ended August. And Ghana publisher Sam Wude is delisting from the stock exchange in Accra after the company's operations were earlier suspended. And Togo has released its conduct of treasury bills auctions for the Q4 final quarter of the year, looking to raise 60 billion CFA franc within the WIMO region. Let me start with you from this FBN Holdings Fitch Ratings story.
Yes, thanks for having me. I believe that what we're also seeing is in line with the review we've seen also for the Nigerian economy. And for when you look at for the banking space, H1 2020, that's the first half result, was came in better than expected or better than projected. And they've seen that for most of the banks, it's like it's a worst case scenario. So we looked at activities have picked up from then, and there's been gradual easing of the opening up of the economy, and we believe that that's also a major factor that was also considered. Wasn't just even FBN that was also reviewed. Other banks were also reviewed upwards. So we believe that that's also a positive signal or a positive factor that investors will also consider. So for domestic investors that have been taking position ahead, like you rightly mentioned, due to less alternatives for investment opportunities for them, this also further buttresses the fact. And even for some foreign investors, we've seen for those that have already still have their funds in Nigeria, some of them are also taking position, and they feel that if they look at the return they can get in the next 1 year, will still be rather than P2. Even for the OMO rate is less than 5% currently. So it's a positive one, and we feel that the market positive momentum in the market would also be sustained. Not ruling out any possibility of profit taking, but we don't expect to see any major sell-off that will last for days and take us back to that position. Yeah, we saw like instance for Nigerian breweries yesterday, there were a lot of profit taking there, but just lost about just 1%. So I think with that, that's positive. You spoke about the PZ Cussons, and if you look at the way their products are structured, I would say mostly high end. So, and they have a lot of local producers that compete with them. So people can, you see, for instance, Money Fresh, people can easily switch to the locally made alternatives for them to wash their dishes. You even for soap. So you have that. It's so amidst constraining disposable income, amidst high cost of doing business, and for them, I think there will need to be like a rethink of the strategy, because this is the current reality. Cost of doing business in Nigeria, we're not expecting it to go down, and they would need to rethink their strategy for them to move back to profitability. If they may want to introduce some low-end kind of products that is also affordable, so that will serve as substitutes to their current products. and that may be able to support their income in the medium term.
Thank you, Adedeji. Onyeka, I'm sure you will agree that where the pressure is coming from for PZ, for example, will be from local MSMEs, I'm sure. If I can't buy your high-end bottle, then I could buy a locally produced one. If it's tea, for example, I can buy local tea or local, not so other similarly produced products by other MSMEs.
Thank you, Brassen. The problems with PZ, I mean, they've been having some problems, across pretty much all their product lines and product categories for a while. They play in the food, in the HPC, and in the white goods segment, and all three segments have not been performing, well. They've been losing market share to not just the smaller local producers, but also to the bigger domestic producers. They've lost market share to Nestle, to Friesland, Campina, to Unilever. They've lost in their white goods segment. They are still losing market share to some of the cheaper imported products, even as purchasing power for those type of goods, on aggregate in Nigeria is reducing. So they're playing in some segments that are not even performing well generally as a whole, and even within those segments, they're still performing worse than competition. And it's a lot of things. But just a couple of things to talk about in this their results, because they released their full year results as well as their first quarter results. And I think it's very important to look at this because PZ basically is a company that plays across the spectrum of the consumer goods space in Nigeria. And because of their unique accounting dates, which ends in May, it gives us a space of how the consumer goods market is performing in both pre-pandemic, post-pandemic. And we look at their 9-month result, which ended in February. They were on course to make a loss, which is not surprising because of how their performance has been so far. But we saw that loss accelerate significantly, in the 3-month period. In the 3-month period of the pandemic. In fact, in terms of gross profits, they made only around 200 million naira, which is really poor, for the company. It just shows the kind of cost pressures that these companies were facing. They also faced, revenue pressure in the same period. Now, fast forward to Q1, which started from June, all the way down to August, and we've seen a significant improvement in their performance. We've seen revenue go up significantly year on year. We've seen them, in short, their loss for Q1, they reported a loss in Q1, but it was significantly less than they did in the same period last year. And they would have reported a profit if not for an FX loss of around 1 billion naira. So it tells me a couple of things. It tells me, it highlights the pressures that the consumer goods companies were facing during the pandemic, and then it tells me that we are seeing some recovery, in a post-pandemic. And it's, for me, that is the positive to take out of this, PZ result.
Thank you so much. Quite a drill down of the PZ numbers. So let's drill into a bit of the PMIs. It's a week of PMIs, not just in Africa, Frontier Africa, but around the world. The Germany's PMI and even within the Eurozone numbers are still coming through. We got Japan PMI yesterday. Ali this morning tweeted on Mauritius GDP for second quarter, a whopping 32.5%, a very hard fall. Then we saw South Africa's PMI yesterday, still below the water of 50, which is the margin of positive reading, 49.4. Analysts said this is much better moving forward from level 2 lockdown now into level 1, international air flights resuming in South Africa. Then you find Zambia's PMI also increasing 46.6 in September from 43.4. Ali, This is very interesting. And Zimbabwe's Mthuli Ncube coming through and saying, look, the economy in Zimbabwe will surprise on the upside, quote and unquote. The whole lot of economic data down there to drill into.
Yes, Barson, of course. So referencing the PMI, we've seen a recovery, but remember that the key price level for a PMI is above 50. Below 50, it's above 50, it's signaling expansion. So, you know, what we're seeing is a rebound from those very depressed levels, but we'd obviously like to see these numbers pop above 50. South Africa at 49.4 is just below the key level. Zambia needs to do a bit more work, still at 46.6. Zambia, of course, has these very troubling debt issues to resolve and is currently in negotiations with bondholders and the IMF and the Chinese as well. That was an interesting story. Group Canal Plus acquiring 6.5% of MultiChoice Group. This speaks to activity in the TMT sector and in the media sector. So that's something that we need to keep an eye on. And then to touch on the Zimbabwe, Mthuli Ncube being very bullish indeed, talking about the economy surprising to the upside. He drew a contrast between other economies and saying they've been hit much harder than Zimbabwe. Look, I think he's talking up his book here because we know the challenges that there are in Zimbabwe. Also yesterday, foreign borrowing numbers were released, which indicated a big surge. And I think Afreximbank has been behind that. They've gone from about $600 million to over $4 billion. I wasn't able to drill more deeply into that, but that seems to be something to keep an eye on. And then finally, Caledonia Mining Corporation mulling buying gold assets in Zimbabwe. I think that's a significant statement, I have to say. It's telling us that investment in Zimbabwe is not totally out of bounds. And I think obviously gold price is helping encourage them look at that. But I think that's something that maybe Mthuli Ncube has appreciated and is giving him a degree of confidence.
Thank you. Let's get a bit of a heads up. We're expecting Nigeria's September PMI out today. Ayode Jiebo at Greenwich Merchant Bank. What's your outlook?
Yeah, we're expecting that there should be a slight increase, though the PMI data published by the CBN showed a decline on a month-on-month. But we feel that there may be a marginal increase because there's still a major challenge around the FX. So for most of the business activities, we're still really very slow in terms of having to import because of the illiquidity in the FX market. And also when you look at with the high inflation rates, that's also affecting the disposable income. So when you look at the factors that you consider, the other level, employment, most of those inventories, it's only when there's demand that you want to stock up, and also if you are not also expanding, then the employment level too would also be low. Yeah, but we feel there should be an improvement, and especially with the gradual easing of activities in the country.
Onyeka,
but I think by and large, you will still be within the. It will still be in the contraction region.
In the contraction region, not significantly upward. Onyeka, if you look at the Nigerian market for today, what's your outlook?
It seems like the Nigerian market is just going higher and higher. It seems like the bulls have, started to return, and they're planting their feet firmly in the equity market. But look, at the start of October, we already said that we expect some positive performances from the Nigerian market. The factors are still there. We're having we still have very weak rates in the fixed income, very weak yields in the fixed income markets, both across for domestic investors and for foreign investors at the same time. And then we saw the signaling from the CBN. People are also positioning, for ahead of the Q3 results, in case, we see some major reactions here and there. So I expect that we'll continue to see some bullish performances. I think the only reason the market might slip into red is because of some profit-taking activities from domestic investors. But even at the close of trading yesterday, we still saw some, decent demand across the space. So all signs point to another green close in the market. About 7% up in 10 sessions. That is the market is moving, is definitely moving higher. How long this will be sustained this is still very interesting to speculate, but for now the sentiment is still quite positive.
Well, for now, let's enjoy the rally. Ali, let's cap it out with North African space, shall we, for today's Frontier opening bell. The Egyptian market reporting a couple of interesting markets and corporate news. The listing of 140 million Egyptian pounds of Lift Labs capital raising. You just raise capital, then you list those shares on the market. Avantis has announced the pricing of its upsized IPO, 9.44 billion. That's the size of the IPO, by the way. And Libya's oil output is racing towards 300,000 barrels per day. 500,000 barrels doesn't look far-fetched, I'm sure. Morocco's S&P rating action, BBB- confirmed, cut outlook to negative. And in Tunisia, the telecoms company Sonatel reports a turnover decline of 43%. Ali.
So let me first start with S&P confirming a BBB- rating, cutting the outlook to negative for Morocco. Morocco, you will recall, sold a Eurobond not too long ago to very strong demand and at a very handsome rate. Look, I mean, there has been pressure on any sovereign rating you care to mention. I can't think of any which have not suffered some kind of ratings action to the downside. I can't think of any who's had any upside ratings action. So I think this is within the bounds of people's expectations, and I don't think it's going to hurt Morocco's borrowing costs significantly. So overall, probably an outcome that they're pretty happy with. Libya output 300,000. We had a great day on the crude oil market yesterday, didn't we? I think it was about 7%. Racing towards 300,000 barrels per day. The most optimistic projections I've seen, if everything calms down and we get a return to the normal situation, you're looking at about 1 million barrels per day. So look, this is 30% of the total production that can be done. But I'm expecting it to level off at around 500,000. Libya remains volatile, though of late we've had some kind of stability. I think both sides are short of cash, and they've decided they're better off replenishing their coffers rather than fighting too aggressively. So I think that's what that consequence is.
I'm sure it's mutually assured destruction or mutually assured resources. You take your pick. So I guess when money is involved, I guess when everybody's dry after several years of infighting and fighting over territories and whatever, the world is going to leave them behind. And by the way, price of oil is tanking, by the way, so they better take a very quick advantage of what is left on the table or what is left in the barrel of oil. Thank you so much, everyone. I appreciate you. We appreciate your time this morning. Ade Jeba from Greenwich Merchant Bank. Thank you so much. Ijoma Onyeka from Vetiva Capital Management and from Rich Frontiers Management, Ali Kansachu. Thank you so much. Have a great day, everyone. We appreciate you.